And g'day, Alex.
Good morning, Bill. How are you?
Well, thank you. And obviously, as I said, digital scam, internet-related scams, very big deal these days. But how prolific is still the old financial advice scam?
The old financial advice scam and scams related to that, Ponzi schemes, affinity schemes, are the most common type of scam out there. Although we hear a lot about hacking and that sort of stuff, I think the old con jobs are still the most common scams. We're talking something like 60% of all scams are the old-fashioned con job.
Wow. Well, let's talk about a few of these. The case, firstly, of Terence Orio Rienzo Nagara.
Yep, what a name.
Yeah, very. It's impressive to start with.
It sure is, yes, and he was a flamboyant, impressive sort of fellow. So he was a financial advisor, and he was actually a licensed financial advisor, which is a bit unusual. Often they're not. Certainly Melissa Caddick was not. But in his case, he was a financial advisor who had a fancy office in Brighton in Melbourne, which is a high-end suburb there. And he ripped off about $12 million worth of money from his vulnerable clients, from some of his family, some of his friends, and some of his elderly vulnerable clients from their superannuation funds.
It's extraordinary, isn't it, just as you make that point, that even though, and of course we know the vast majority of financial advisors are good people who help us out, quite a few of them are on this very program on a regular basis, but it is doubly difficult, obviously, for a client when you're dealing with a licensed person. It's one of the first things we say when we're talking about dealing with anyone, from tradies to any professional people.
Yes, that's right. That's the first bit of advice I'd give if anyone you're dealing with a professional. Make sure they're licensed, whether it's an electrician, yeah, that's right, whether it's a lawyer, whether it's a doctor, whatever. And a license normally is a good sign, and certainly that is one thing you should do. And just because he was licensed, I don't think that means licenses mean nothing. But there's a lot more you could do to protect yourself. In particular, don't give access to people. Don't give direct access. Don't give anyone direct access to your money. Most of these cases are cases where elderly people or vulnerable people have actually given their computer passwords or given their banking passwords to these people, or given them, transferred large sums of money into their account. And then those people have been able to then just transfer them out into their own account or transfer them overseas or buy things with them. And it's that direct access that's really the problem.
So is that what Mr. Nagara did? And what, if you do know, made him turn from being a licensed normal advisor to someone who was ripping everyone off?
Yes, so that is what he did. He had some fake investments, and he made fake portfolio statements for investors, and some of the money that was coming in from investors, he would pay back to other investors and give the impression that there was a good underlying investment, when in fact it was just a Ponzi scheme where he was robbing from Peter to pay Paul. That was his whole sort of modus operandi. In terms of why he did it, I think that fundamentally, and I've studied this quite a lot, and fundamentally these people are different to kind of blue-collar criminals. These white-collar criminals are not like blue-collar criminals. They're really just greedy. They're usually wealthy, successful, educated people who should know better, but they want to get rich quick, and this is the way they do it.
They just get overcome, and the urge is too great. And in Melissa Caddick's case, obviously she didn't even have a licence. I mean, what she did was, it's been well documented, but it's outrageous. Just run us through some of the worst things she did, obviously, to some of her friends.
These are people who, some of them were at her wedding. So she's ripping off, her very close family and friends, and they're people who really trust her, and that's the kind of the affinity scam, as they call it, where you've got an affinity with her and you think you're in the sort of exclusive club. So she ripped off about $30 million from her friends and from her family. Almost all of her clients were close connections of her. She had lived in Dover Heights in Sydney, so in a nice area. Same sort of deal as the other fellow. Exclusive. Drove a Lamborghini, was very flashy, and ultimately she took $30 million from her friends and family, spent a large amount of it, and then the minute the authorities were onto her, she took to the wind. So we don't actually know what happened to her, but she disappeared, and that was the most exciting bit of the whole story, I think.
And the interesting thing here too, and the ironic thing, is that a lot of people are in fact wooed by the affluence of the person they're dealing with, and falsely believing that is a sign of credibility. It's not. It's just a sign that they've been a successful crook.
Yes, well, that's right. I mean, we're talking about really extreme affluence here too. We're talking about Lamborghinis. We're talking about, Nagara had a helicopter and a boat and a number of sports cars. You're talking about really extreme examples of wealth, which you really don't. I mean, maybe if you're the chairman of BHP, that's something you can do. But if you're the local neighbourhood financial advisor, that kind of display of wealth shouldn't be seducing you. It should be sending up a big red flag that there's something suspicious going on here.
Any other significant financial advisor scams and cases you've come across, mate?
Well, in October, we did have the arrest of Jasmine Vela Apache. She'd taken $3 million. She wasn't a registered financial advisor, but she was doing share trading and giving financial advice to people on the sly. And she'd taken about $3 million as part of an international scam to really fleece people's superannuation funds. So all of her victims were elderly people, and she changed their super funds to self-managed super funds and then transferred the money to herself and then again tried to disappear. But she was arrested in October as well. So you do have them quite regularly. Some of them are higher profile than others. And in the US, we have a lot of them. Bernie Madoff was a very famous one in the US who fleeced millions and millions of dollars from people successfully for a long time before he was caught.
The father of the so-called Ponzi scheme, I suppose you could say, with Madoff. Yes. But although that kind of scheme's been around for a long time, hasn't it?
Yes, that's right. So the Ponzi scheme was invented by Charles Ponzi back in the 1920s. And I think as long as there are people around who want to get rich quick and are people who are willing to hear the story that you can get fabulous returns if you have some secret approach to investing, as long as there are people who are willing to hear that and are willing to give money to it, you're always going to have Ponzi schemes, affinity schemes. You're going to have good old-fashioned con jobs, whether you're talking about Bitcoin or some high-tech investment, or you're talking about real estate, or you're talking about shares, or you're just talking about cash. It's all the same when it comes to, greed and people's willingness to give away their money if they think they're going to get rich.
Well, a lot of these cases, as you say, involve total fakery. The money's going somewhere that it's completely made-up investment. Yes. But in other cases, there are more legitimate sort of setups, but they are skimming.
Yes, that's right. So that's quite common as well. I mean, we probably the most famous cases are really cases where the money was stolen and the police go in and arrest people and people nick off to Bali to hide and all that sort of stuff. And in Melissa Caddick's case, disappears altogether. So that's what gets the media. But there's plenty of cases which are less severe than that, where you have either a legitimate investment but it's been misled or missold in some way, or you have a legitimate investment and people are taking money off the top. And it takes years to actually discover that. And sometimes by the time they're discovered, they've taken tens of millions over many years, and the investors are all out of pocket.
And look, whether it's the first instance or the other, how likely is it that people affected by these scams actually get their money back? What's the recovery rate?
Yes, so it's reasonably poor. In the Melissa Caddick case, her house was sold and she had an investment property with her parents, which was sold. The proceeds of that needed to be split with her ex-husband and with her parents who owned that property. But there was a recovery in the millions, but I think there certainly wasn't in the 30 million. So most people either lose their money completely or they lose a lot of it, because often, in the case of Nugara, there was no money left at all. He'd spent it all. And in the case of Vela Apache, she'd spent it all as well. So often there's no recovery at all. You sometimes can get some luck with the banks. The banks can reverse things or pay if they've made a mistake. You can sometimes have insurance for these sort of things, but generally people, if they invest in a dodgy scheme and they hand over their money voluntarily, then they're out in the cold and they'll probably never see their money again.
Yeah, it's incredible. Alex, how do they break it down to who gets how much?
Yes. So, I mean, in Caddick's case, it's up to the court and the liquidators, and they will look at who was involved. And so in the case, there was a big issue as to whether the husband was involved in the scam or not. And if he wasn't involved, then he should get his portion of the house as if he was getting divorced, like in a family law settlement.
And that was a big part of the case, wasn't it, determining that?
Yeah, that's right. And the same with the parents. Now, there was no suggestion the parents were involved. So if they had a legitimate investment with her, they should get their half of that investment. And then the rest goes to the creditors. And it just goes cents in the dollar equally amongst all of the creditors. So they're all unsecured creditors and they'd all just get paid out. If 50% of the if there's 30 million owing and they recover 15 million, everyone gets 50 cents in the dollar.
Now, you touched earlier, mate, on the red flags. What are some of the lessons we can learn from stories like these?
Sure, yeah. So there are a lot of lessons, and they're all the same. It's interesting whether you're dealing with Nagara, you're dealing with Caddick, you're dealing with Bernie Madoff. It doesn't matter. The lessons are the same. So licensing, which we talked about, that's something to check. It's not perfect, but you should certainly check that the person you're dealing with is licensed. If you're getting financial advice, there should be a discussion around your goals and around your personal circumstances, not just a one-size-fits-all solution. So these people were all touting this magical solution, invest in this property, or I've got this secret tip of this stock that you're going to get rich. There's no such thing as that. It's all rubbish. You need to look at your own goals, and if your financial advisor is not looking at your goals, then they're really a salesperson. They're not an advisor. And then the final thing really is have realistic expectations. The more return in any investment, the more risky it is. It's as simple as that, and no advisor will tell you any different. So if you're expecting very high returns, or you promise very high returns, they're likely to be rubbish. And if they are true, then there must be a very high risk. And so it's just that risk return thing. And I mean, ultimately, if you're told that you can get rich quick, then that's too good to be true.
Alex Martin, thank you so much for your help.
It's a pleasure, Bill.